Welcome everybody to Thursday Night Live, the most fun you can have on a Thursday. I've got my Diet Coke Zero Sugar, but it's a limited edition Coke Zero, and it's actually really good. It's Oreo cookie flavored, fizzy cookie flavored, which is crazy. It sounds weird. It sounds like it might be gross, but it's actually my favorite version of Diet Coke. It's a limited edition. Coke does not sponsor this channel, but if it does, I'll take the money. All right, so let's get into the markets today. I'm going to share my screen. It was an intense market day for futures trading, for just the overall volatility on the overall SPY. We're going to break down the broad markets. Then we're going to break down the sectors. Then what we're going to do is we're going to break down some trade ideas. We're going to go into some trading recaps. And then I'm going to do Q&A. So we have about an hour booked for today's session. So feel free to ask your questions. If you're on YouTube, feel free to hit the like if you wish and comment down below what your thoughts are on any of these stocks. And we do have non-farm payrolls tomorrow. So we have jobs data and anything can happen. So the charts may look one way at this point in time, but they can easily change course. So I'm going to move Discord over here. And let's get first into the S&P 500, the SPY. So this is our SPY S&P 500, kind of just in this rising wedge type channel, but no huge bearish sentiment just yet. So we kind of have a bit of a doji day today, or a high wave candle, which just means indecision. You know, we've kind of had just a little bit of a channel, and this isn't a bearish channel necessarily. Of course, there are lower highs and lower lows, but it's not an aggressively bearish channel. By the end of the week, I do think the SPY does close above 560. I do think that it will hold support. So I don't expect it to drop more than 1%. Unless some crazy news catalyst happens or the VIX starts to go crazy, I do expect support to hold. However, I don't expect SPY to really get much above 573, 574, unless there are some major bullish catalysts. If we take a look at the quick 5-minute time frame, you kind of got just a lot of liquidity sweeps, meaning we break support and then we jab back up. We are unable to hold the midpoint of the range, and then we zip to the low of the day. We kind of sweep some liquidity again, zip back up, unable to break the high of the day. So this is a great market environment for iron condors. And if we even just go over to like the trade ideas channel, like Jonathan has been crushing these iron condors. And basically what you're saying when you open up an iron condor is, hey, I think the market's not going to go too far up or too far down. We're going to close within a certain range. And that's where you set your legs for the iron condor. So the SPY, you know, if we take a look at the SPY options chain, it's not expecting a big move. It's only expecting plus or minus $5, which actually is a pretty decent move. So we're not expected to go $5 higher or $5 lower. So that would be about 573 is like the upper range for tomorrow. And then if we go $5 lower, maybe a little bit more, you know, so we could potentially squeeze a little bit lower if we take out this demand zone, the support area, because it's clearly defined. So notice, hits it, bounces, hits it, bounces, hits it, bounces. Is it going to bounce on the fourth time? Probably not. So if you see SPY coming underneath 566, we could have a little bit of a bigger downside day, maybe a little bit more than 1% down. But 563 is going to be support, 560 is going to be support. And I do think that those are areas to potentially write bullish put credit spreads on, at least for the day, or maybe not over the weekend. It depends on how the market's setting up. If we take a look at the Qs pretty much flat. Qs closing a little bit more strong than the SPY. You know, Qs are only down 0.07%, while SPY is down 0.18%. But again, that's not anything to really gripe about. So Qs, if we take a look at some of the individual components of the NASDAQ, you know, we can take a look at Amazon. Amazon, I gave a 180 buy price. It's sitting at about 182 right now, but it got a good bounce to 183. Amazon's fair value is about $230 a share. So I do think that longer term, if you're a longer term investor and you're willing to hold for more than a year and maybe even survive a potential recession, Amazon shares are a decent deal. around this kind of like buy zone. So let's see how Amazon fares up. And we will be breaking down XLY and friends. Meta, new daily closing high. Meta actually really helped me trade futures in the middle of the day. When I saw Meta starting to break this, it helped me get a few scalps on NQ to the upside. So if you're seeing individual stocks within an ETF starting to break up, that can give you a hint towards what might happen in the futures market. And so Meta, daily closing high. You guys know that I've been loving XLC, the communications sector, because XLC has Meta, Google, Disney, Netflix. And all of those I think are worth the long, so might as well go with XLC. If we take a look at Tesla, Tesla having a down day today. Is having a decent down day earlier in the morning, a little bit off its lows. I wouldn't be surprised if Tesla sold more. Maybe not from here, it's tough to say. That'll depend on non-farm payrolls tomorrow. But, you know, Tesla 226, 225 might be an area of support. Tesla tends to trend really well when it gets a trend. So I like Tesla longer term, but right now I think you can wait for a new setup, wait for a better deal. You guys know that I like TSLL for the wheel. I do not have any TSLL. I am flat this. But maybe if TSLL comes into like 1050, that could be a good area to start selling cash secured puts. Okay, so that's another trade idea. Google, pretty much, you know, we bought Google at the 150s level. That was posted in the Legion Investing channel. And Google's up, you know, over 10% from that. We have this little like flag pattern that broke out, but not explosively. Now it's retesting the throwback. So Google, you know, short term probably just goes not really anywhere, not too far up, not too far down. Longer term though, I do think Google fills this gap, maybe within a few months. So $180 a share, maybe even my end of year price target if the market holds up. So I'm bullish Google, but it's short term, anything can happen. It's kind of one of those things where give yourself time on these contracts. If we check out Netflix, holding that 700 critical level. I am still long Netflix. You can see my positions right here. I've got a bullish butterfly that makes the most if Netflix can get up to that 750 level by mid-November. And then I've got December, a bullish call debit spread, basically just saying, hey, Netflix, if you're above 710 by December 20th, give me my max profit. And I can just let that expire and not even use commissions to close the trade. So that's pretty cool. I like where tech is right now, but you know, things can change. You know, if Netflix breaks this 700 support, it could be a decent flush point because those buy orders will get exhausted. So keep an eye out on Netflix to see if it can break out or break down. Really, earnings on October 17th are going to be the biggest catalyst for Netflix shares. Okay, let's check out the IWM, the Russell 2000. I gave this a neutral rating back here at 218. We're pretty much at that same level, you know, 216, 13. Support for IWM is 212. Resistance is going to get tricky. You know, there's a lot of muck up here. Obviously, probably 221 to 222. But IWM, not looking terrible, but not looking great either. So we'll see if the small caps can catch up. There's a lot of push-pull in this market, and that's kind of why we're seeing a lot of indecisiveness, if you will. So wait on IWM. Next up is SMH, the semiconductor ETF. This is a leading indicator for the NASDAQ. So if you see semis green, you know, the NASDAQ tends to have a bit of strength. If semiconductors are red, the NASDAQ will probably be a bit more red than the rest of the market. NVIDIA has been really strong, you know, breaking out from this pennant, retesting the pennant, now moving up. I don't expect NVIDIA to go up way too much. I don't expect it to crash as of right now. AMD is doing its thing, you know, caught a good pullback, break, retest, and then shooting back up. I am still holding SOXL, the wheel, just 100 shares of it, and selling the the 37 covered call expiring tomorrow. Got $151 in credit for that. So I'll just continue to wheel this until I get called away. I am aware that semiconductors can get clapped, and if SOXL drops, you can see a decent down move, down to like 31-ish. So be careful on SOXL, but higher risk, higher reward. Let's see if semiconductors can hold up in this market. Next up we got is the VIX. Let's break down the VIX, the volatility and fear index. We talked about it bouncing off the 200-day moving average, and now volatility is starting to expand. So when volatility expands, you're going to see greater ranges. You're going to see big moves up, big moves down. Generally, I notice I see a bit more follow through on the intraday charts, both to the upside and the downside. Mostly the downside, though, as VIX is inversely correlated with the SPY. Not perfectly inversely correlated. It's a correlation coefficient of minus 0.7. So if it were -1, it would be, if the VIX is up 1%, SPY is down 1%. Maybe not exactly in terms of percentage terms, but you get the point. VIX inversely correlated with the SPY. VIX, if this starts to break kind of this like bull flag, this kind of like rally, resting bar, is it going to be another breakout bar? That's tough to say. That'll be determined by news catalysts. So that's why the swings are pretty light as of right now. So that's the overall broad market analysis. Now let's take a look at the individual sectors to get another look underneath the hood. So let's break down the energy sector. The energy sector has been going off because of tensions from the Middle East. Resisted at the 200-day moving average, pulled back, put in a higher low pivot, and now seeing a higher high. I would expect that energy probably just maintains this, doesn't go straight up, but maybe has a sideways to slightly higher trajectory. Yesterday's retest was pretty good. Stocks like Oxy are doing really, really well. OXY, XOM is doing really, really, really well. Almost on the verge of a breakout for XOM. We can take a look at oil futures. Oil futures are up big today, 5.38%. So if you trade that and you trade futures /CL/MCL is another way to trade that. And now we're in the Goldilocks zone that the Fed really likes. So that's MCL and CL. You could also trade USO calls and puts, or if you like shares, you can buy UCO if you think oil's going up. And you can buy SCO if you think oil's going down. So oil, I don't really have an opinion too much on it. It's going to be, you got to take it day by day. But we're coming up into an area of resistance, but the short-term momentum is decently strong. So we'll see. Maybe oil does test $80 a barrel, especially if war tensions escalate. So that's oil and that's energy. Now let's take a look at the next sector. Technology, XLK. Again, going to be very similar to the NASDAQ. If this holds, a good higher low pivot and, this trend line doesn't really break, we might just like chop and coil upwards. And really, if XLK, the technology sector, holds above 225.30, you could see a breakout. I don't expect any crazy breakouts before the election. Generally, the market tends to go into a holding pattern coming into the election. So knowing that, I think it's a good time for wheeling stocks, wheeling relative strength stocks that I don't mind owning, and, keeping mostly cash on the overnight sessions. And of course, I've got my other investments, so just let those do their thing. Okay, so that's XLK. Next up is XLF, the financial sector. Financial sector, again, not a great day trading type of sector, but a peaceful swing trade. We still do have an ascending triangle. It hasn't really triggered. Short term, there is a flush point on XLF underneath 44.67. Keep in mind that this is an ETF, so price levels may not exactly be precise. Because, there's a lot of moving parts. How's Goldman Sachs doing? Kind of slowly drifting down, nothing crazy. Goldman Sachs sets up a long over 507, 506 area. Other than that, though, I'd kind of leave it alone. SoFi, I think SoFi is great for the wheel. That has still proven to be the case for multiple weeks. And, maybe SoFi does eventually break out. I think a good sell point for SoFi is 9. So if you want to, maybe you could load up, 100 shares, 1,000 shares, 10,000 shares of SoFi and just sell 9 covered calls. Maybe go out on SoFi, maybe go out to November 15th, sell a ton of 9 strike covered calls. If you get called away, cool. If you don't get called away, cool. You get the premium. So that's a potential trade idea for SoFi, longer dated longs with covered calls. That's my favorite kind of banking stock because their overhead is so low. You can take a look at Wells Fargo, kind of looking a bit dubious here. We got higher lows, we got lower highs. We're beneath the 200-day moving average now. It's tough to say on Wells Fargo. I think it is slightly overvalued based off Morningstar reports. So maybe leave Wells Fargo alone for now. It doesn't mean short. It doesn't mean buy if a stock is over or undervalued because a lot can happen in the short term. Morningstar gives a fair value of $60 a share on Wells Fargo. Bank of America, they give a fair value of $39.50. Citigroup, they give a fair value of $70. JP Morgan, they give a fair value of $178. If I were to short a bank stock, like just one stock, it would just be Bank of America. But again, this is not the best short. Here's an example of a flush point and then a quick reversal. So the market is kind of, it's not respecting clear-cut support and resistance levels as it normally does. Next up we got is the XLU, the utilities sector. XLU. Wow. Beautiful chart on utilities. I did not take the short. Thank goodness. Utilities, just way, way up there. A bit of a dark cloud cover today, but I'm not going to try and call that top. This is a relentless uptrend. Weekly breakout, all-time high breakout. Nothing bearish about all-time highs unless it really turns into a big failure. Then it is a reversal. But XLU, a great dip buy would be 73. And another great dip buy for XLU would be 78.26. Monthly, a little bit extended, but not too bad. Not too shabby. So that's the XLU. Not much to say there. XLU, the utility sector, does pay about a 3% dividend. 3.3% dividend on XLU. So, you get a little bit of cash flow while you wait, which is pretty cool if you do decide to buy. I'm not saying that right now. And by the way, none of this is financial advice. I'm just analyzing charts. That's all. XLI, the industrial sector. Again, nice rally, flag, and a breakout. Showing a little bit of monthly topping tails. Nothing too crazy. It can morph into something more. Maybe it has about 1 to 2% downside if it breaks support. But nothing too much there. It's kind of just like the SPY. XLV, the healthcare sector. Let's check it out. XLV actually starting to break down a little bit. So last week we were debating whether this is a double top or not. I said it kind of is, but not really. Not textbook, but here's kind of our low range. Here's our high range. We did break support, kick back, turned it as resistance, and now we're starting to flush a little bit. If I were to short one stock in the healthcare sector, it would be LLY. And the reason is it's just overvalued from a fair value perspective. It's been a beast of a stock, though. I think there are better stocks to short, but maybe LLY gets a breakdown underneath 877 and can test 840. That could be a potential trade idea. LLY short underneath 880, take profit 840, stop would be 895. It's not a bad risk to reward. Your reward is 5%. Your risk is about, 1 to 2%, depending on how much wiggle room you want to give it. Bear call credit spreads might be the easiest way to potentially trade that. And I would give until the end of October for something like that, barring there's no earnings. 10:30 is earnings. So 10:25, maybe do something like sell vertical. Jeez. See what kind of credit you can get and just leave it alone. Keep the risk in the spread. No need to take profits early. No need to cut early. Just enter the trade when you get the trigger and pray to the trading gods that you get paid. So that's a trade idea on LLY, bear call credit spread, October 25th, if it's breaking underneath 880. Okay? So that's LLY. Next up we got is XLC. You know, we talked about this a little bit, but XLC, I look for relative strength on this. I'm expecting just sideways to slightly higher. Even if it does break down short term, I think it's a dip buy. So shares, a good support for XLC would be 87.70, similar to that SPY 460 zone. Okay, and you can take a look at Disney, which is a component. Disney trying to hold support. It is showing relative weakness compared to the broad market. So Disney might go sideways for a bit before potentially rebounding. I have a little bit of a longer term bullish bias on it. But as long as Disney's holding above like 87, I think it's okay. I wouldn't want it really coming, much underneath 90. As long as Disney's above 90, I give it a neutral rating. If Disney's above 95, I give it a bullish trend rating. We discussed Netflix, we discussed Meta, we discussed Google. Next up, we've got real estate, commercial real estate, XLRE. Kind of staying in this channel right now, just chilling. It is at an area of critical support, so let's see if that holds. Otherwise, if this starts to break down, they're probably going to grab stop loss orders underneath here, 42.85. And another great support would be 42.28 for the real estate sector. Not too much to say about that. XLB. This is our materials sector. Kind of breaking down. Let's see if it can come into 93 support. Notice the rise in volume on this sell-off. That tells us that it may have some legs and it could extend a bit further. Are there any short opportunities? Yeah, it's tough to say. Tough to say for now. Next up, we've got is consumer staples. This was a great win for the Legion. XLP consumer staples. So here's a quick trading lesson. This is like a decent head and shoulders pattern. You got the left shoulder with the volume spike kind of right here. You got the head with the spike. You've got an evening star reversal, bearish reversal pattern. You have a drop, a bear flag. It started to break out, but it couldn't close above the level. So this is an example where you want to close above resistance to really confirm the uptrend. That's why the closing price at the end of the day is so important. It tells you the conviction of the buyers and the sellers. And so we tried to break up, fail, close underneath. Tried to break up, fail, close underneath. Once consumer staples broke underneath 82.36, that's why I'm alerting the puts. It wasn't anything crazy. It was only 1% size, but still a peaceful little swing trade. And then this morning, you can kind of see the textbook drop, bear flag, buy the puts right up there, take profits pretty much near the low of the day. I didn't nail the low of the day, but catching this down candle right there, I'm alerting that I'm exiting. Cool. Nice little win. If consumer staples maybe comes back up to 82, that can be a potential reload short if you're interested in shorting a sector. So there's the technical chart is the reason why I shorted XLP. But also, stocks like Walmart are going crazy right now. Like this is a parabolic uptrend and it's not a tech stock. There is more downside risk than upside risk in my opinion. And I'm willing to be wrong about that, but that's my current thesis as of right now. Like Costco needs to cool off at least a little bit. Costco, I wouldn't even consider buys until like 823. And there's no buy setups on Costco. So you had that earnings day, gap down, a retest of the pennant breakdown, continued downside, lower highs and lower lows. Kind of have a bit of an upper wick on Costco today. And again, potential breakdown on Costco tomorrow underneath 870. Maybe it could test 850 if volatility expands. So that's consumer staples. Look for the shorts on retests. And then lastly, consumer discretionary, where Tesla and Amazon live. coming into an area of support on the hourly, daily area of support. I really like the price of 189 for XLY, consumer discretionary. And this will take off if we start to go into a super booming economy and everybody's got an extra, 100 grand in their bank account ready to spend. XLY is probably going to take off. If the consumer is constricted, they're not going to have as much discretionary income. Not as many Teslas are going to get bought. People aren't going to shop on Amazon and buy things that they don't need as much on Amazon. But that's in a scenario of a recession. Right now, the Fed says risk on. Okay? So those are the overall sectors. Now just a brief mention of some trade ideas, some trade setups, maybe some investment ideas. ET, energy transfer. Again, nice breakout today. Bullish, bullish, almost engulfing candle. It's a bullish candle either way on a minor jump in volume. We do have this flat top kind of at 1650. So if it breaks out above 1650 and holds it as support, ET is probably gonna, I think it can do this range right here from, let's just say from 15 to 1650. I think it has $1.50 of upside. So you could see ET at this 18 level if the 1650 level breaks to the upside. So it also pays an 8% dividend while you wait. And options are super liquid. It's good for the wheel. You can go with leap options, you name it. So ET, a good stock, in my opinion. I like it. I like the stock. And January 2027 17 strike call looks like a really good deal from an implied volatility perspective. You just buy a couple of those. You don't get the dividend on ET, but you can get a really good move on this option if that scenario does take place. The risk on ET is really if it violates these higher lows and maybe just tests the 200-day or breaks underneath it. That's the less likely scenario as of right now. Another idea for a potential investment is DraftKings. Again, fair value is about $49 a share. I know that Piper Sandler owns some DraftKings. And again, we got shallow higher lows. We got a bit of steeper higher lows. As long as today's low holds, this could be an okay buying point. The volume isn't really giving much confirmation though, and it is beneath the 200-day moving average. So DraftKings may need some time. Another idea is silver. Silver's really coiling up. Silver's a breakout buy over 29.50. Okay? And I do think silver can then test this 32 level. If silver breaks out, I was trading Ford/SI futures in the middle of the day and caught some really good moves. Silver futures, gosh, this is today right here. So basically traded this breakout and just, one or two contracts, and that's a good move, 0.5%. Silver contracts move like crazy. So if silver breaks out, that's another trade setup. You can add to the silver position. I do already have a position on silver. So let's see if it can get going. If we take a quick look at gold, GLD, kind of just coiling up here. Gold's a little bit more bullish than silver, but I think silver might be rotated into instead of gold. So those are the main things I wanted to talk about today. What kind of questions and stocks do you guys want analyzed? Take a sip of my Coke Zero Oreo, which is hilarious to me if you ask me. Any ticker requests, you guys? Post them now. Okay, so Jesus asks, hey Greg, in your VIX video you said if there's a lot of open interest on VIX call options, big money is preparing for something and wants to hedge. What numbers would you have to see open interest to pique your interest? I think it's more so just like relative to what. So let's take a look at the VIX. So let's take a look at the options chain on VIX. I don't even look at open interest too much. It doesn't matter too much. Because they could also be long or short those calls too. That's the thing. But like, where are the most contracts being held? obviously for October 9th, there's a lot of open interest at the money on the VIX 20 strike call. So open interest, there's 1,000 contracts right there. So are they long or short those contracts? You know, there can definitely be some hedging activity. There's a lot of uncertainty in the world, a lot of uncertainty with the economy. Some numbers may or may not be real. It's tough to know. If we go out a little bit further, you know, you just want to look for crazy outliers and then ask yourself, what does that mean? Sometimes if there is a lot of open interest at a certain strike price, that can kind of be like a gravity point, kind of like a volume profile. So volume profile is telling us volume by price, not volume by time. And VIX doesn't have volume. It doesn't trade volume. I don't want to really do this, but we can look at the UVXY. And UVXY point of control is lower. This also is a triple leverage version of VIX. But, you know, it's really tough to speculate. And it's just like, okay, pick your spots. Do you think the market's going to break down or do you think it's going to hold? You know, SPY's point of control on the daily all the way down here at 471. There's also a good volume node at 520. Another good volume node at 543. Another good volume node at the support that I think holds tomorrow, 559. And I could be wrong. You know, anything can happen. But pay attention to that. Notice, look, in the morning, right up here, volume node rejects, turns into resistance. So if there's a volume node or a point of control that's above price, that can be a potential area to take profits. Tony Chica says, what are your thoughts on PLTR? PLTR is a really interesting stock, and it's been a good winner for us pretty much all year. I just wish I would have held longer. Looks great. I mean, it's a bit, you know, depending on your time horizon, it's a bit too high to chase and buy. But this is a nice daily trend, a nice breakout. If we look at the monthly time frame, still has yet to reach all-time highs at 45. I do think it does break above all-time highs. I need to do a little bit more research, but from what I know, PLTR is overvalued according to Morningstar. They only give it a $19 fair value. Is there risk with it? Of course, but it's tough to say. Like OKTA apparently has a higher fair value. CrowdStrike. This might need to be updated, but yeah, I mean, it looks good. It's just one of those things where there's just no entry points. It kind of reminds me of like Rocket Labs, RKLB. Like, you can buy high. It's just tough because your risk to reward is skewed. If you can wait for price to come to you, that's a lot better. So Rocket Lab, maybe if it can come back to like 8, that could be a cash secured put opportunity. But PLTR, it's been great for the wheel. I've just gotten called away, getting called away at 30. I haven't traded it in this range yet. A lot of them, shock gaps. So right here's a shock gap where it's a big gap up and you take out days or weeks of buyers and sellers and it creates a chase and upwards momentum. Now PLTR breaking out. It's pushing up after hours even just a little bit. I mean, tomorrow if 38.90 holds, it's good to go. There's probably a lot of liquidity underneath this ascending triangle. So I don't have much to say besides I do think it breaks 45. It's just, does it do it from 39 or does it need to come back to maybe like 33? Certainly if PLTR breaks underneath 36, it has room to drop. So there's a lot of buyers that defended that level. And if that level gets lost, then it can potentially flush. But really good question on PLTR, Tony. What an interesting stock. What an interesting stock. Next up, let's check out Redfin. Redfin. RDFN. Redfin's getting clapped recently. It's been doing well as of late. Gave this a buy rating at 890. Stock is now at 1130, but it got as high as 15. This one's an interesting one. Maybe support did hold today. It's kind of like a lot of other stocks in the broad market. Did support hold, or are we going to break support and head lower? And the news catalysts are really going to dictate that. There's resistance, cleared resistance at 1195, kind of the 12 zone. I don't know the fair value of Redfin. Weekly chart, just kind of neutral. Monthly chart, big breakdown from 46.38. How's Zillow doing, Z? Zillow's been recovering, probably a lot with the other housing stocks. Zillow looks a bit more constructive. Zillow support level 57.77. What can I take a look at? How's it, Home Depot doing? Home Depot, another daily high. Nothing's stopping these home builders right now. And this comes down to booming economy or recession coming. Right now, the stocks are being priced as if we're about to see a booming economy or that we're in one. So take it at face value, but be prepared for anything. Home Depot on its way to all-time highs. But, when it comes down to Redfin, I think if you're going to take a long at it, I do the wheel. I wouldn't try to buy leap calls or anything like that. And, just know your risk. I wouldn't short it. I think there are probably better things to short. How's Lennar doing? Lennar just kind of holding up. Fair value gap or fair value point of control is, 153. But a lot of these stocks are in strong, steady uptrends. You kind of just have to wait for the trend to break, if it's ever going to break. Okay, the hurricane also contributed a lot to these housing materials. That's an interesting question. Clutch the Wires asking, what do I think about Feppy Long? That's an interesting stock name, or ticker symbol, I should say. Feppy. Interesting. Tell me about this. Innovation Equity Premium Income ETF. Interesting. Invests in publicly? Okay. Information technology sectors? Okay. I'd have to do more research on it, so I don't know. I probably shouldn't really chart it out since it's an income ETF, but really interesting moves, for sure. I would say wait on that. Let me do a little bit more research before I say anything. All right, let's check it out. GDX, the gold miners. GDX, kind of just hanging in there. Looking like it could potentially break down. Support for GDX is 37.50. It does have a steeper downtrend line to pay attention to. As you guys have known, I've been liking GDX for the wheel ever since 27. I've been liking GDX long since 30. Been wheeling GDX in the 33 zones. Got called away. GDX certainly is a story for sure. Weekly time frame could be, I'm going to clear the drawing set. I've got a lot of drawings here. Weekly time frame could be a bearish evening star reversal. So you could see a little bit more downside, especially since you broke out and now it's immediately selling. Generally, whenever you see a breakout, you want it to break out and then continue going, or break out, retest, peacefully hold for a bit, and then continue. So the question becomes, will it hold or not? Looking at the monthly time frame of GDX, I'd give a $50 price target if you're willing to hold for longer than 3 years, which, opportunity cost becomes a factor at that point. We can take a look at some of the individual names in GDX. Newmont Mining, down a little bit today. Kind of looks very similar to GDX, wouldn't you say? Newmont Mining, from a fair value perspective, is a bit overvalued from what I recall. but the trend is still there. Fair values, Morningstar gives a $52 a share. So, 52 is also a trend line support. Not a lot of volume transacted at these levels. I would just give Newmont a neutral rating. I wouldn't buy it. I wouldn't short it. We can check out GOLD. This is Barrick Gold. And I do want to peep at, where did I have that? On the GOLD, we can go over to the Analyze tab, check Morningstar. Barrick Gold is undervalued. So maybe instead of wheeling GDX, maybe just wheeling Barrick Gold and then sell tons of covered calls at 22. I'm going to leave that over here. Barrick Gold. Yeah, I just let it get oversold, sell cash secured puts, get assigned, sell covered calls, rinse and repeat. I would only abandon the position on GDX, which I'm not actually in GDX anymore. I got called away. I would only leave that if you need more short-term trading capital. That's kind of how I would, manage that trade. We can take a look at some of the other ones. AEM, Agnico Gold, AEM. Again, kind of looking top-heavy. A lot of these are looking pretty top heavy. This one might be worth a short because its fair value, they say, is 77. It's only a few % downside from here. If we check out Kinross Gold Corp, let's check out K. They give this a fair value of 8. This is Kellogg's, so wrong stuff. Crazy move. Crazy chart. Okay, let's check out Coinbase, COIN, Coin. Coin's been all over the place. It occasionally trades technically well, though. Nice breakdown right there. A nice rising wedge. I took this put trade and took profits down here. That was a good put trade. I'm glad I stayed away with it in this chop. That would have been a nightmare. Tried to break out of the range. I said that 200 to 195 would be supply. The high was only 192, so I didn't take that short. Coin kind of looks like a drop, bear flag drop setup. Even if it does break above the bear flag, it could test 176, which is a decent move, don't get me wrong. It's just a riskier one if you ask me. So I would just mark the highs and lows of today, and that probably dictates Coin's next bigger move. The upside is limited, maybe as a 5% upside move, but I think the downside, it could drop 7% or more if it really starts breaking down. So Coin coiling up, wait for the range to break. You kind of need volume to confirm that. The last thing you want to do is see a breakdown and then it just jabs up, or see a breakout up and then see it just jabs on down. So Coin, let the range establish itself, and that'll be the next trading opportunity on it. I'm not a big fan of trading Coin. I'd rather wheel Mara and CLSK. It's just a more peaceful way to live. Can I repeat what I said about abandoning GDX? I would abandon GDX if you need extra short-term trading capital, but if your time horizon is longer than a year, I think it's worth it to keep wheeling. That's my thoughts on GDX. Or you could rotate out of GDX and just go with GOLD, since it has room to fair value and it's a little bit cheaper. So you can maybe wheel a little bit more. You can wheel pretty much twice as much on GOLD than you can on GDX. So that's my thoughts. Any other last questions, you guys? I'll be on the Victory Talk podcast tonight at 7 p.m. Eastern. I'll get this out to YouTube. Really, really good week for swing trading. We can take a look at some of the other positions over here. TZA wheel's doing good. XLP did well. ET's going well. Google It's going well. ASTS, I'm taking a little bit of heat on, but, you know, I'm cool with it. The premiums are so high that it reduces my risk. Yeah, of course, FVZ, you got it. What was the fair value of gold? $22 a share. So that could be a great level to just load up the covered calls at. That's just a simple trading strategy. It's not I'm not saying it's the best or that I've back tested it or anything like that. I think it's just a simple way to live life. Is dump stocks when they get above fair value and buy stocks if they get beneath fair value, but they also need to meet your other criteria and technical setups as well. Of course, hey, this is Thursday Night Live. I'm Legatus Greg. You can also call me Young Candlestick. You can also call me Greg Breheim CMT. Whatever floats your boat. I'll use any one of those titles depending on the situation that needs it the most. I'm signing out. Peace.